Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. A couple days ago, I talked about the potential for Tesla to raise prices if nickel prices were to start to soar, or if other important metals for battery production were to start to soar. And of course, 2 days later, here we go. We see Tesla going ahead and upping their prices. So let's take a look at this real quick. We can see here from Gary Black tweeting, Tesla raised U.S. prices for Model 3 long range, Model Y long range, and Model Y performance by $1,000. In addition, buyers can speed up their delivery of Model 3 rear-wheel drive from July or Model Y long range from December to May by adding the $12,000 full self-driving option. Now, there's a lot that was just said there. We're going to focus on the increase of the $1,000 per vehicle model at first. Now we're going to get into some other stuff that is going to blow your minds. I'm telling you, this is next level stuff from Tesla. I couldn't even make this up if I wanted to. This is just genius level. And I'll give you a prelude. Tesla is about to have the opportunity to almost 100% up their margins. Okay, so let's focus on the upping of their prices first. So we can see here that Tesla is going to increase their prices by $1,000 based on these certain models. And so we can see here that Gary essentially listed them out for the Model 3 and Model Y. Now, the biggest thing that we need to understand is that these happen to be concentrated towards the Tesla vehicles that will be leveraging nickel within the battery. Okay, so there's a difference between what they're doing with LFP versus the nickel batteries. So why is Tesla doing this? Well, I don't think they're doing it by any means. I've talked about this in volumes with this whole Russia-Ukraine impact happening, but I don't think Tesla's doing this because they have a issue with pricing when it comes to getting nickel. Tesla has mining contracts, supply contracts, battery contracts for days way well in advance. Keep in mind, Tesla knew that Giga Austin and Giga Berlin were going to be opening. Tesla knew that they have this ambition to ramp up to $20 million 20 million vehicles by 2030. So they've had this big aspirational number for quite some time. And Tesla has said over and over, even though we're producing our own batteries, we still will buy every single battery any of our suppliers can produce, as long as they're not going to try to, rip us off and price gouge us. I think this whole move by Tesla, upping it by $1,000, is only for two reasons. One, to get ahead of any kind of potential drastic increase in nickel prices. So right now, I think they're fine. I think they have enough runway with how far out they get their supply chains and their contracts and how that's structured. But this is more of a Tesla can make this move now and to attempt to prevent any potential issues in the future when it comes to pricing power. So that's just next level move from Tesla. But then also, with all of this demand that Tesla's starting to see, demand for electric vehicles, especially for Tesla, are surging, okay? You have to understand, with price of oil going up to historic levels, we were just seeing, $130, $140 a barrel? I mean, this is crazy. This is oil boom time type levels. But with that happening, people are feeling the pinch at the gas pump. And it doesn't take long for somebody to sit there and say, okay, hold on, let's take a step back. Let's do a little math, right? The math nobody ever wants to do when they're all about internal combustion engine vehicles. Now they're sitting there doing the math. Okay, if I'm paying $4, $5, $6 a gallon for my vehicle, if I have a 20-gallon vehicle, if I'm filling up once a week, all right, you start doing the math on that, and you start to realize, oh my God, in 1 month, I could be paying for more than half of what it would cost to buy a Tesla. Well, maybe it makes more sense to buy a Tesla even if it costs these crazy prices. Now, this isn't to say that everybody should go out and buy a Tesla just because gas prices are high. That's foolish, okay? You need to do what's right for you. This channel is all about investing against the grain, and investing against the grain means not being a sheep, not doing what everybody else does. So when it comes to your own personal financial understanding and benefits and decision making, make sure whatever you do makes sense for your household. Okay, gas prices shouldn't dictate what vehicle you buy or don't buy. But if you are somebody who can afford to buy a Tesla, because I'm not gonna sugarcoat it, it's not like they're cheap by any means. No brand new vehicle is cheap by any means. But if you start to do the math and you're somebody who can afford it and it fits within your budget, well, then it very quickly starts to make sense that, the math just checks out that Tesla's become more cost effective than buying a brand new ICE vehicle. So that's a lot that's happening. And so I think part of the other reason why Tesla upped these prices is because they need to somehow temper down the demand for their vehicles. And it's such a crazy problem to have. But Tesla's not demand constrained, they're production constrained. And so by upping the prices, you make it just a little harder for people to buy it. You take out that total addressable market, you lower it just a little bit by upping the price ever so slightly. So I think that's part of what it is. Part of it's a nickel, and a lot of the demand coming in is purely from oil and gas just going through the roof with pricing. This is a big deal, but this isn't how we get to this crazy new high level when it comes to margins. Okay, that is primarily to do with what you see here with the full self-driving. Okay, we're going to do some basic math real quick. So we know that last quarter, Tesla sold 309,000 vehicles. Again, this off the top of my head. I believe it's 309,000 vehicles. Now, it's very easy to take the total revenue divided by the amount of vehicles and to figure out what the average selling price was. And the average selling price for a Tesla vehicle in Q4 of 2021 was $52,000. Okay, this is a great number, right? Great number as an investor. Okay, so if we take that 52,000 and we multiply that by 30%, which is what they're getting on automotive gross margins, we're looking at about $15,600 that Tesla makes per vehicle. $15,600 per vehicle. Okay, not too shabby, right? Industry leading, nobody else is close to it. Tesla's rocking out on all cylinders. Yet, I made a bold statement saying that Tesla may essentially double what this could be, or they have the potential to. Well, again, let's go back to this tweet from Gary Black. And if you look at the second half of it, it says that people can get into the front of the line for their reservations if they add the $12,000 full self-driving package, the option. So in other words, Tesla is going to prioritize full self-driving options, or people who have ordered the vehicle with full self-driving before others. This is next level. This is genius. This is two birds with one stone for Tesla. Think about it. One, they get more people using FSD beta so that they can get more people out there. They grow that part of the business. They get more data back, more learning, more areas of the country, more areas the vehicle see, right? The whole full self-driving narrative, that helps that out completely, right? But then on top of it, I just got done saying Tesla's not demand limited. Tesla's production constrained, okay? Now, keep in mind, this might get better, especially as Austin opens up, which should happen any day now. Berlin, it will have production, I believe, live in 7 days, and then delivery in 10 days, all right? So the 22nd, I'm not really sure what today's date is, but the 22nd is when we have the big delivery day at Giga Berlin. And I think Austin will actually probably happen on April 7th. I think Tesla's not trying to rush it. I mean, we see all the vehicles stacking outside of Giga Berlin, but the point is, those two factories are imminent, and then that's going to help the production constrained part of it. But let's pretend those factories didn't exist. Okay, Tesla has all this demand, yet they're production constrained. Even when Austin and Berlin open, they're still going to be production constrained because those factories have to go through a ramp, right? It's not like the factory opens and boom, we're making 100,000 vehicles a month out of them. It doesn't work that way. They need to ramp up gracefully, gradually, methodically, and then you eventually get these big numbers. It takes about a year, I would say, to ramp up fully. Okay, so with that said, we are production constrained. There's lots of demand. Yet Tesla now is able to pull this other lever that without selling any more vehicles, they can essentially double their entire gross margins that they make on a per vehicle basis just by telling people, hey, if you have the FSD option, you will be moved to the front of the line for your Tesla order reservation. So let's go back to the calculator. So here we have the calculator. We had $15,600 per vehicle based on a $52,000 average selling price from Q4, right? If we add in the $12,000 option, all of a sudden, this goes to $27,600 per vehicle. Per vehicle. Let's do some other interesting math. If we take that and we divide it by the average selling price of $52,000, This comes out to 53%. 53% would be the automotive gross margin on this. Now, this is just insane. But take a step back, though. Keep in mind, Tesla isn't recognizing all of this revenue up front with full self-driving. They're only recognizing a portion of it until it's complete, feature complete. So as it's just beta, they only recognize a certain portion of it, and then they put the rest of it off for the future, right? They just keep pushing that off, and eventually it'll hit the balance sheet. But either way, it's still the margins that they're making. So with all these vehicles that are going to have FSD, they have a potential to be making around 53% per vehicle. This is nuts. This is absolutely nuts. I think the iPhone makes something like 45, 46% gross margin on an iPhone. So this is next level. I mean, this is literally software as a service almost type margins. Okay, well, maybe not quite. I mean, those are probably higher in 70% ish. But the point is, this is ridiculous. That every other automaker is sitting there at what at best 9 or 10% automotive gross margin, and Tesla's a potential to go to 53%. It's just wild. This is a amazing next level move by Tesla. They're able to pull this lever without doing anything else. Now, it'll be interesting to see what the uptick is in people who go ahead and opt in for this, right? How many people say, okay, you know what? Screw it. We'll go ahead. We'll get the $12,000 option. If you amortize out that $12,000 over the course of, say 72 months. Actually, let's do that math real quick. So if we took the $12,000, and this probably isn't the best way to do it, but we'll divide that by 72 months. It's an additional $166, okay, on a per month basis to their entire car payment. So it's not nothing, but some people might do it, and a lot of people are doing it. So this will be very interesting to see what the total number is. And it's not like Tesla actually lets us know what the take rate is for their full self-driving, but I think this will definitely increase dramatically. I will say, though, it is something important, just a caveat. This is primarily for the United States. Full self-driving beta currently is only in the United States. It is getting released in Canada. It hasn't yet, but it will be released in Canada. I think tonight, actually, is when it gets released officially. So this may become a North America thing or just a United States and Canada thing, probably not Mexico. But the point is, it's happening, right? And this is just yet another level, another next level move by Tesla. So let's pivot one more time and let's take a look at some potential bullishness for Tesla, okay? Look, I get it. We're all just pissed off. Some people are sad. I mean, I've seen tweets essentially all weekend, people saying how, they're sad, they're depressed about Tesla's stock price. We're down to $7.95 again. Yeah, it sucks. Trust me, I get it. It's annoying. But like I've been saying over and over, in my opinion, and again, I don't believe in timing. I don't believe in prediction. I believe in long-term investing. So in my opinion, if you have shares, you shouldn't care about it. Honestly, the only reason I care about it is because I have some option contracts. So that's the only reason I even care about this. But if I was a betting man, I believe that come April is when this whole turnaround starts. Okay, I've been saying this nonstop. All right, on Wednesday, we're going to get the official Fed decision on what they're going to do with rate hikes and all that, and we'll know that. So that will be out of sight. I think Ukraine and Russia, I think this resolves itself sooner than later. I don't think this can be something that keeps dragging out. I think this can go a couple ways. I think either Russia completely takes over Ukraine and then they put in a puppet government. I think there's a potential where Putin kind of capitulates and tries to get a win, and Zelensky essentially negotiates with them saying, okay, you can have these parts of Ukraine. We'll consider those part of Russia, or we'll just consider them their own little nation states. And then, it's essentially over at that point. Or you never know. I mean, something could happen to Putin. There could be a coup. But either way, I don't think this is going to last too much longer. And maybe that's just me being hopeful. I hope it doesn't. We just need peace. We don't need this war. It's just silly. And this isn't even me just saying this for the stock market. It's just, it's ridiculous. But anyways, so come April, we'll also be getting more information from Tesla. We've already had Berlin open and producing vehicles and delivering vehicles. I think Austin will happen. We'll get delivery numbers, which leads me to my next point, delivery numbers. Okay, look at this tweet from Gary Black. From Autodesk, Tesla 2022 U.S. sales through year-to-date February are 83,000. That's up 79% from 2021 February. Okay, 79% year over year. That's insane. So for those of you who don't know what I'm saying there, in February of last year, you take the number of vehicles that Tesla sold in the US then, and then you compare that to this year. Tesla went up 79%. They did 79% more. Like this is just nutty. These numbers are nutty. The fact that they keep and they're only doing this from Fremont. It's only Fremont. Like it's not like Austin's open yet and contributing. This is only from Fremont. It's wild. Okay, let me continue here. And way ahead of the 115,000 U.S. deliveries Troy Tesla expects in Q1. If you guys don't know, Troy Tesla is historically really accurate at predicting Tesla's quarterly numbers. And essentially what Gary's saying here is that Fremont is outpacing these predictions. Even before the Russia and Ukraine war, the sharp rise in gas prices since last year have driven Tesla Q1 year-to-date sales sharply higher. So why is this extremely bullish? Well, I go back to my whole, April thesis about when I think things are going to turn around. Now, the easy ones, the low-hanging fruit is Giga Berlin, okay, and Giga Austin. We have actual dates for those. We know when that's going to happen. We know what's happening there. All right, so that's low-hanging fruit. Now, China numbers will come out in April, all right, but I don't think anyone's going to care about those because by then we will have already gotten Tesla's Q1 total deliveries. And so I think that's the number to focus on. Now, again, Q1 is historically always for Tesla the slowest quarter of the year, or the least amount of deliveries they have for the year. Always. If they continue, just like they did last year, if Q1 outdoes Q4, and in Q4 is the year we did 1 million vehicles essentially. I mean, this is going to be insane. This is before Berlin. This is before Austin. It just shows you the power of Shanghai and Fremont. But what we're seeing here is that Tesla is already, if they just stuck to the same numbers that they had from February, all right, just from February, the month where Shanghai had their New Year's, their Chinese New Year's, right? So they had a whole holiday, a whole week there of holiday. And don't forget that February is the shortest month of the year. And we use February's number and we extrapolate that out into March. Tesla's already at essentially 300,000 vehicles for the quarter. And in Q4, they did 309,000. All right, these numbers are going to be bonkers. March is going to be a big, big month. All right, the last month of every quarter is always the biggest month of the quarter for Tesla. So we have lots of reasons to be really bullish here. So I think a very strong number coming out of Tesla for their Q1 deliveries. I think you combine that with Austin, you combine that with Berlin, you combine that potentially with any good news from full self-driving. I mean, the numbers are going to be nutty. And then, of course, you have Tesla earnings, all right, Q1 earnings. And I can't stress this enough. Assuming Elon's not going to be on the call, which there's no reason to think he will be, right? He said a while ago he'll only be on if there's a important reason to be on the call. Other than that, he's stepping away from him. The only reason he was on this last one was to kind of give us a company portfolio roadmap of what they're working on, what things are going to happen moving forward. And you know what? Historically, Wall Street doesn't like it when Elon speaks. However, the one earnings call where Elon wasn't on there, where Zach and Drew and team took over, Wall Street loved that quarter. They loved everything they said on the earnings call. So I don't think this can be underestimated. All right, having Zach lead this call will be a big deal. So with all of this going on, all of this excitement, all of these potential new levers that Tesla can pull, and I'm not saying that this effect from the $12,000 from full self-driving will be something that we see immediately with Tesla, or at least not in Q1, but come Q2, come Q3, especially with Austin and Berlin ramping up, I think the margins are going to be crazy. I think we're going to be seeing, 32, 33%, maybe even higher, right? And the reason I'm saying those numbers and not 52, again, is because with full self-driving, we don't recognize everything up front, right? We're delaying a lot of the revenue from full self-driving because it's not completely feature complete. So until that happens, Tesla's not going to recognize all the revenue from it. So there's a lot of reasons to be excited here. Now, again, you never know. We've had black swan event after black swan event, and something else could come up. Biden could do something silly. Putin could do something silly. Another NATO country could do something silly, and all of that just escalates even further. I mean, who knows? I mean, the Fed may do something completely, wonky that we're not even expecting. Right now, we're expecting a 25 basis point hike from the Fed, and we expect those to kind of just continue. Hopefully, the Fed gives some guidance on what their plan is for that, and they're in a very tough position on how to manage everything because they've got all of the inflation that is happening just organically from oil embargoes and Russia Ukraine conflict. And then they have the actual inflation that we have here in the States. You couple that with the supply issues that we've had from COVID, and then the Fed is sitting here. They can't drop rates anymore, which is historically something you would want to do in times like this of war to stimulate the economy. But honestly, our economy is too stimulated. It needs to slow down. And this is where the Fed tends to overcorrect, and that leads us into a recession. And for all we know, we are in a recession right now. We just don't know it yet. All right, that's a high possibility. I keep hearing people say that we're not in a recession, but the truth is you don't really know until we have the GDP numbers. All right, that's how a recession is determined. 2 consecutive negative GDP quarters. So we may be in one and we don't know it. So it's funny to hear people say that we're not in a recession. We could be. I don't think we are. I think I still look around. Everybody's spending money like crazy. Everybody's out and about. The only thing I see people complain about is gas prices. And I think that's very bullish for Tesla. So, this is a perfect storm for Tesla as a company. They have oil, gas prices at the highest level ever. People are getting pissed off about it. Meanwhile, Tesla has 2 factories about to come online where they can increase their production, where they have the most demand of all time. I mean, it's a perfect storm for Tesla. Absolutely perfect storm. So as an investor, you really can't be happier. Now, all we really need is the stock to start reacting in the right way. And again, I think come April, we will start seeing that. All right. I hope this episode was informative for you. I hope it if nothing else, it gave you, more hope and renewed confidence in your investments. None of this investment advice, but sometimes hearing something that you know to be true helps you with what you're doing and helps you, live to see another day, helps you to not sell out of your positions, even though it hurts. Look, everybody's hurting right now. It's a consensus across the board, across countries, across everywhere. We're all hurting. The entire world is going through this compression right now. However, these things don't last forever, and we'll get out of it, and we will see better days. All right, so we're going to leave it there. I hope you guys enjoy the rest of your weekend. I appreciate you stuck to the end. Do me a favor, hit the like button, hit the subscribe button, ring that bell. I love you all. Peace.